Welcome to the Tokenized Economy. Here is today's explainer on tokenizing bonds and fixed income.
We've talked about tokenizing all sorts of things, but today we're focusing on the asset class that is really leading the charge in the real world, fixed income. We're going to look at why bonds are the perfect starting point, see who's making big moves across the globe, break down how it all actually works, and then land on the single biggest insight you need to take away from all this. Let's get right into it.
Okay, so first things first. With all the different asset classes out there, stocks, real estate, you name it, why is fixed income the one taking off? Why are bonds emerging as the leader in real-world tokenization?
Well, the answer is all about the nature of a bond itself. I mean, think about it. Unlike a share of stock or a piece of art, a bond is incredibly structured. It has cash flows you can predict, a specific date it matures, and a life cycle that's all mapped out. That standardization, that's the absolute key.
Because bonds are so structured, they are just perfect for programmability. All those clear-cut rules can be translated directly into a smart contract on a blockchain. It's kind of like taking a flat, static legal document and turning it into a dynamic piece of code that can actually do things. And that programmability is what unlocks the magic of automation. Think about all the manual, repetitive stuff like making coupon payments on a schedule or handling the payout when the bond matures. A smart contract can automate all of it. And this isn't just about convenience, it's a massive leap forward in operational efficiency. And finally, this opens the door to totally new models for settlement. You know that complex, multi-day process of settling a bond trade? By putting ownership on a shared ledger, tokenization can make it way faster and potentially a whole lot less risky. Now here's where it gets really exciting. This isn't just a cool idea on a whiteboard anymore. We are well and truly past the theoretical stage.
The proof is right there, in the real-world institutional activity that's happening as we speak. Major financial players have gone way beyond just experimenting. They are actively issuing, trading, and settling tokenized bonds in key markets all across the globe.
So let's take a quick look at where all this action is. The momentum is really building across North America, Europe, and the Asia-Pacific region, and each market has its own unique flavor. Over in North America and Europe, a fantastic example is the recent U.S. digital bond from Société Générale. It was issued on an institutional blockchain called the Canton Network, using infrastructure from the giant Broadridge. And the partners were all names you'd recognize. DRW bought the bond, and BNY Mellon was the paying agent. This just shows how this new tech is plugging right into trusted market structures. And it builds on years of progress from firms like Siemens and the European Investment Bank, who have been issuing their own digital bonds for a while now.
Then if we hop over to Asia Pacific, it's really interesting because we're seeing governments themselves leading the way. The Hong Kong government issued a massive multi-currency digital bond. And in Singapore, there's an ambitious initiative called Project Guardian that's exploring how these tokenized assets can plug directly into the core financial system.
And when we talk about that Hong Kong bond, we're not talking about some small pilot project. We are talking about a bond program worth around 1.3 times billion US dollars. This is tokenization at a significant scale, all being led by a major financial authority. It's a really big deal.
Okay, so we've covered the why and the who. Now let's dig into the how. How does a regular traditional bond actually get transformed into a tokenized asset?
While the process doesn't exactly reinvent the wheel, it's more about extending the traditional way of doing things onto new blockchain rails. It all starts with the same legal framework, so the bond's terms don't change at all. Then, that bond is represented as a digital token. Investors are brought on board through the regulated firms they already know and trust, and finally, the tokens are allocated, settlement happens, and the bond's life events, like those coupon payments, are all handled on this new infrastructure.
Now here is a crucial point to get. The blockchain is not the new legal record of ownership. The official record is still maintained by a registrar, just like it's always been. The blockchain acts as this powerful extra layer of record-keeping that operates right alongside the official one.
It's also so important to understand that this is not happening on open public blockchains like Bitcoin or Ethereum. We're talking about permissioned networks. These are private, controlled environments. You can think of it like a secured members-only club, where only known, vetted institutions can participate. It's not a public square for just any retail wallet.
So, what's the big takeaway from all of this? This brings us to the single most important insight from today's explainer, and it's all about how we should frame the true impact of this technology.
Tokenization is not here to replace the financial markets we have today. It's here to extend them. It's not about tearing down the existing house and building a new one. It's about adding a high-tech new extension.
It gives us a new, more efficient layer for execution and record-keeping, while still leaning on all the strength and trust of the system we already have.
And this just perfectly illustrates that core idea. The foundational pillars of the market, they stay right where they are. The legal structures that give an asset value, the institutional roles that make the market work, and the overall integrity of the system, all of that is preserved. This is truly evolution, not a revolution.
In our next explainer, we're actually going to build on this foundation and take a look at how tokenization is now moving into treasury markets, funds, and even collateral. Thanks for watching. If you want to keep up with how our financial markets are evolving, make sure you subscribe and let us know in the comments what asset class you think is going to get tokenized next. We'd love to hear what you think.